Hey, how you going? This is a video for USD CHF or US dollar Swiss franc. So basically I'm going to do a technical analysis breakdown for the monthly, weekly and daily time frame just to give an overview of where the price is taking us with the markup already started. Just a reminder, this is a forecast pathway based on confirmations following the rules which are applied. To find out more information on this one, please read the disclaimer in the description and also look at previous posts I've made to follow the pattern of interest. So, without further ado, let's go. So, basically, we're looking at the monthly time frame here, and price has hit a fresh level of demand and rejected immediately and headed up to 94 cents per dollar, which is a strong move. Now, price will retrace a little bit, heading back down towards this candle close here on the body, which is a nice netting of the imbalance of these two candles here. Price can also look to the 92 slash 91.2 level here, roughly, which can fall in line with these two tweezer bottoms here. So keep that in mind. Where price can go in the long term is looking for heading up towards parity again. Now, the reason why for this is due to a number of reasons. One being it's a original level which has been tested once. The demand zone is in full control at present, and knowing how candlesticks work, if you're a technical analyst or follow technical analysis in general, the way market breaks to the upside, it takes a long path route back, walking up slowly. Now, there is no real price confirms here as to where price action will really have any issues climbing back up. As you can see, there's multiple weeks of rejection, so strong supply in force, and walking back up slowly, with price action on the monthly being through multiple months, hitting back up, we've hit on a massive slam down. So the weekly will show the price action zones where price can cause a bit of an issue on the walk up, but we'll use this as a PCP demand zone, or for those who do rally-based rallies, this is for you. The short-term traders, I'm not interested in you guys or gals, so go to another video, but this is for the long-term holders in position trading. So we'll go down to the weekly. As you can see, I've already marked up the PCP NFL target for profit one, which we've hit, and our price is going to deviate back to a pivot point based upon the criteria of strong price action here. So this is all strong price action right here, and price can revert back to the exact markup on the weekly and daily using a confirmed rejection as stated. Now, price, the next time it touches this zone, obviously the zone weakens little by little, the more taps it has. In this case, for a demand zone, it's been tried and retested and formed a criteria of a strong pattern of building layers in the demand zone before shooting up. So when price reverts back, it tends to revert back to a strong basis level before reverting off again into the next criteria of the structure. So if I remove this and make it a bit easier to follow, price normally works like this pathway. So it creates the structure like so, creates a bullish engulfing candle of where price needs to revert to slowly back to this line, and then price will use this as the PCP and head up, and then reverting back to this pivot point later. And that's the general rule of thumb. However, the market doesn't always follow this incremental footsteps. So the weekly also here shows price can revert to here, head back up after a little bump of formation, head back up here, head back in, penetrate this level deep in the zone, can tail back out using this as a stepping stone, head back up into the next zone up here towards 97. Now notice how price action here is heavy in terms of the step up, but this massive engulfing candle here took out 600 pips within a week. There's no real cause for concern here, so price will just do a U-shape recovery and head back and walk all the way back up to parity. So there'll be no real zone of interest here to head back. But do keep in mind for possible pause of interest is roughly here. Now price has tested this point here already, so 97 looks like a little bit of a pause point for breather. We'll create a nice price action zone and head up and revert back towards parity. So that is the program of choice in terms of market structure we can lift. We'll go down to the daily and we can provide a further insight with the markup already set. So this is the current weekly supply already set up. I'm still in favor of the buyers for longs, so not hedging at the present unless required. Just going to look for a new position to jump in on terms of the current long position already in place. So what I'll be doing is I'll be waiting for price to head back down towards 92, and then we'll be looking for a confirm candle which can take out this wick here and head back up. So in terms of structure, what that will look like, it will be like price falls like this to a pivot, retains back, falls even further, using this as poor candlesticks in terms of price action. Looking towards this candle here as a target, 924, maybe penetrate a little bit further to create a double bottom. Price will revert back and a little bit of a relief. Then price will just pull right back and remove all of the structure left. And same with this left. Then it'll look back to here, may pull off a little bit again, then pull back further. That's kind of like the sign, and your base requirement on entries will be based off a buying impulse like so. Impulse, correction, impulse, correction, impulse. Standard format of how everyone shows you their market structure of trading, but once you're buying and holding, you're good to go, you saw it. So that's it. Always remember daily confirms for trading and look at the higher time frames for where price can deviate next. So yeah, I hope that helps you. Hooroo, have a good one.